Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. During New York trading, we had the Japanese yen weakening by nearly 2%. This is after the election over the weekend of Sanai Takaichi as head of the LDP. And in a moment, we'll look at what her victory means for Japan with Bloomberg opinion columnist Garode Reedy. But we begin with a look at U.S. price action. Our guest is Ed Butowski. He is managing partner at Chapwood Investments. Ed, thank you so much. Can we talk first about the price action that we had in the artificial intelligence trade today? There's been a lot of talk about the fact that we may be in a bubble right now, given where valuations are. I just want you to weigh in. What's your take?
Yes, I absolutely think it's a crucial subject because the spending that's going on is sort of like looking into the globe or looking into space and knowing what we see where there's Mars and there's the moon, but we really don't know what else is beyond that. And the spending is just outrageous. There's this frenzy of trying to get money into the AI space. All my clients ask me how to take advantage of the AI space. And I tell them that it's sort of like, it's going to be like nanotechnology, where it's going to be a part of businesses, but making money in AI is going to be very, very difficult. And the analogy I was starting to make was that you can look and see only so far, but how much further does the universe go? We just don't know. And we don't know what the universe is going to hold for these AI stocks.
So is that going to put a lot of pressure on the Magnificent Seven in particular when we get quarterly earnings coming up in the next few weeks? And if there is disappointment, maybe not on the most recent quarter, but when it comes to guidance, is the market particularly vulnerable here, do you think?
Well, there's no question about it. The Magnificent Seven is very, very expensive based on today's predictions, but we just don't know what the rest of the world is going to look like for them. So it's a very, very difficult thing to forecast. But their earnings expectations, they're probably going to meet their earnings because earnings expectations have come down. But what they say is what's going to be important, and how much CapEx spending they're going to be able to do is also going to be very crucial. If they don't do a lot of CapEx spending, then they're probably going to get slaughtered.
Yeah, I want to give a hat tip to Wired magazine. I was reading today a piece in Wired talking about projected spending in AI infrastructure this year at around $400 billion. But if you look at where consumer demand for AI is right now, it's only at around $12 billion a year. So that seems to be a pretty remarkable disconnect, does it not?
Yeah, but then you have to ask yourself, what kind of demand is there for AI other than Perplexity, ChatGPT, Grok, where you pay $20 a month? How else are we having this appetite for AI? I don't understand it.
The other thing that was interesting today, I mentioned the records for the equity market. We also had a record for the price of gold. We came very close to $4,000 an ounce here in New York. Bloomberg was talking with Ken Griffin from Citadel, and he was saying that investors are starting to view gold as a safer asset than the dollar. And this is something that is very, very concerning to him. Do you share that point of view?
Yeah, I think that gold has, it was always thought to be an inflation protection, but you can see that inflation has come lower and gold prices have gone higher. So I don't think anybody really understands the movement of gold today. I certainly don't. I've been doing this 40 years, and I've just seen gold kind of remain flat, never really being an inflation hedge. And, because of the weakening of the dollar, that's one of the reasons that we've seen gold go higher. But it has not been an inflation protection. So I don't think anybody really truly understands that other than the momentum that you're seeing with gold.
What about the notion that tariffs will be inflationary? Today, as a matter of fact, the White House announced tariffs of 25% on medium and heavy-duty trucks. They will take effect November the 1st. Originally, that was supposed to have been an October 1st deadline. But talk to me about the extent to which tariff policy will impact future inflation.
Yes, I think that you have to look at the number that 25% of what we use in this country comes from outside the United States. It's only 25% is subject to tariffs. Then you have to dice, you have to splice up exactly which tariffs are going to be impactful. middle-sized trucks and small trucks, you have to figure out what percentage of our GDP does that represent, and nothing really represents a lot. So I think the inflationary pressure from tariffs is something that's misguided. I don't think there's going to be a huge amount of inflation because of tariffs.
So does that necessarily mean then the Fed is clear to begin with another rate cut this month?
I don't think there's any question we're going to see another rate cut. I think the GDP numbers and the inflationary numbers are begging for a rate cut, probably one this month and then one next month, and then maybe another one before the end of the year. But definitely we're seeing a lower interest rate environment.
To what extent has the equity market discounted that completely? And if so, is further upside necessarily limited?
I don't think further upside is limited, and I'm not a raging bull, but I do look at things practically, and lower interest rates are going to make the cost of borrowing a lot cheaper. And I do believe, to answer specifically, I do believe a lot of this is already factored in to the market. If you look at the futures market, they're looking at a 96 to 100% probability of a rate cut this month. So the market is a great discounter of future events. And I think they've already discounted it.
So where are you finding opportunity these days?
I love utilities. I have for quite some time. I actually like UTLS, which is 3 times the utility bull market. And it takes the utility index and multiplies it times 3. And my clients have done very well by it. And I continue to believe that utilities are going to excel.
Doesn't that go back to the AI story, though, when you look at demand from data centers? Isn't that really the thesis here?
No, I don't look at it from that standpoint, although that is a nice beneficiary. I look at it from the standpoint that interest rates are going to drop and the cost to generate energy has come down. So if you look at what goes into utilities, those costs have come down, those commodity prices, and that is kind of a secret or a silent dividend to all of these utility companies, because the cost for them to do business has gone down.
So what is the average dividend that one of the utility stocks, what does it kick off on average?
About 3.5%. So I look at them as growth plus income versus income plus growth. I do look at the growth of the value of the asset going higher, plus getting about 3.5% income off of them. And they've been really wonderful. And I truly believe they're going to continue to be towards the end of the year.
How are you feeling about the bond market? We've got a 10-year at around 4.15. You said a moment ago you expect the Fed to continue to cut rates. Is this an opportunity maybe to take a position in fixed income?
Yes, although fixed income bores me to tears. It really does. Unless we're dealing with distressed and high yield bonds, those kind of excite me. But when you look at a single A corporate, it's just like buying, a 10-year treasury, and it just doesn't do much for me. So I'm not really that interested in them.
Beyond the coupon, though, I'm wondering if there's an opportunity for a little capital gain if you were to trade it.
A very little. And you'd have to be dealing with millions and millions of dollars to make it worthwhile. Otherwise, you're just getting about a 4 or 5% increase in the value of the underlying security.
Okay, Ed, we'll leave it there. Thank you so very much. Ed Butowski is managing partner at Chapwood Investments, joining us here on the Daybreak Asia podcast.